Hello and welcome to The Way I Work, a podcast about how people get work done, brought to you by Rigby, a staffing and services company based in Zurich, Switzerland. If you are looking to hire or to be hired in the Zurich area, let us know. You can do so either at rigby.ch/apply or by checking out some of the requirements that we currently have open at opportunities.rigby.ch. Today we're very happy to welcome to the podcast Mr. Ronald-Peter Stöferle. Ronni is Managing Director, Partner and Fund Manager at Incrementum AG, an independent investment and asset management company based in Liechtenstein. Ronni and his colleagues at Incrementum are also the authors of the renowned annual In Gold We Trust report, which has really become the preeminent piece of research in the precious metal space today. Among the topics covered in the report are the development of gold in different currencies, technical analysis, de-dollarization, inflation and deflation, gold bonds, gold to Bitcoin comparisons, mining stocks, storage, portfolio characteristics, looking at how gold performs under different economic conditions, and trust in the reliability and strength of the monetary system. The report is put out in both English and German, and also now in Mandarin Chinese, as China is the world's biggest producer and consumer of gold. As I think you'll hear, Ronni always brings a keen sense of humour to his analysis of markets and is always fun to listen to. So, without further ado, Ronni, how are you doing?
Very good, very good.
Great. I'm glad to hear that, Ronni. It's good to speak to you.
Absolutely. How are you, Daniel? What's going on?
Yeah, I'm doing great, thanks, Ronni. If it's okay with you, I think we'll just jump straight into it.
Perfect.
All right. Ronni, you're known for your views on markets and on gold in particular, but in this series of conversations, what we're really looking into first and foremost is how people work, so how they got to where they are today, and a little bit about what makes them tick. So you grew up in Vienna, Austria in the 80s. Were you always a very studious type, or were you rather out roaming the streets and getting into mischief?
Well, I have to say I was kind of a normal kid, at least in hindsight. I don't know. You probably have to ask my parents.
Right.
But I was a very, let's say, efficient student or pupil. I went to grammar school, which is like, it's gymnasium would be the term. The first 4 years in a very conservative Catholic private school. Did lots of sports. Played soccer there, played tennis and table tennis, and I went through school. It went pretty much okay. I would say it was very efficient, and didn't study too much, as much as needed, I would say. I was very much into music besides sports, so that was the time, of I played also the guitar in a band, so we were big fans of Guns N' Roses, Skid Row, Metallica, Slayer. We went to concerts, saw Aerosmith, CC Top, and all those bands.
So you were a rocker.
Yeah.
Okay, that explains the Guns N' Roses quotes in the In Gold We Trust report.
Yes, I said, I quoted the great gold analysts, Guns N' Roses, saying all we need is just a little patience.
Right.
So, no, I mean that's that was my the years from 10 to 14. Then I went to a commercial college, which is 1 year longer over here in Austria. So it took me 5 years, but it was great because you learn like accounting, economics, of course, very much Keynesian economics.
Right.
But also we had a little company that we ran. It was a internet provider, and so I learned very early on. I would say the basics of our economy, how everything works, how accounting works, international trade, and so on. Because I was always very much interested in those topics.
Sure. But was that some kind of an apprenticeship program at the commercial school?
No, it was it is called Handelsakademie over here. So you can basically say, okay, I want to do the last 4 years in a typical gymnasium like Oberstufe, but you can also go to a technical college, HTL, or a commercial college. And I said, it makes sense to do an additional year there. So I did it for 5 years, and it was a great experience. But for me, I always knew that I would love to, do something that is related with finance, perhaps set up my own company. So for me, it was just very obvious to pick that school. While for other friends of mine, they didn't have a clue what to do in their lives. So that was probably the big difference.
So kids in Austria don't get taught Austrian economics from kindergarten on then?
No. I mean, we're trying our best to change that a little bit reintroduce Austrian economics to Austria. But I sense that the thoughts of the Austrian School of Economics are mainly taught on universities and in schools in former socialist countries, because they know how oppression feels, they know how socialism feels, and therefore if you go to, I don't know, to Czech Republic, for example, I think people know significantly more about Austrian economics than over here in Austria.
Yes, I suppose that makes sense, doesn't it? And Ronnie, could you tell us a little bit, please, about your very first experiences of work? So how did the young Ronnie earn his first shillings?
Well, yeah, I mean, I think it was like typical tasks like, mowing the lawn and stuff like that. And it is interesting over here in Austria, but also probably in Germany. I always say that we've got gold in our monetary DNA. So it was just normal, to get for Christmas or for your birthday from your parents, or especially grandparents who lived through all those currency reforms where they always lost basically everything. Getting like small pieces of gold, the Dukaten, for example, or small Philharmonic coins, but later on, that was just normal. So I always had kind of a feeling for gold, that it was something special. But then I started doing summer jobs pretty early on. And the first one was at Billa, which is a supermarket over here in Austria, and it was really a horrible job. I had to get up like at 5:30, which is really early for a 14-year-old kid, and I hated the job, but it was, I earned, I remember, I think 12,000 shillings, which is roughly a little bit less than 1,000 euros, and yeah, I saved the majority of it, but I also bought a Sony mini disc recorder.
The mini disc, I remember.
I love the mini disc. I think it has always been a great format, much better than the normal CDs. Great quality, and I was so proud of it. I was so proud of it, and that I learned the lesson that if you work hard for the money and then buy something with that money, you just appreciate it much more and you take care of it. So and then I basically every summer I worked for at least 1 month, and also I tried, besides going to school, I always tried to make some money, and later on I found out about buying stocks. So that was something that really fascinated me very early on.
Okay, so you always wanted to work in finance, but can you trace that interest back to any one event in particular?
It's hard to say. I think when I was like 10 or 11 years old, I had 10,000 shillings. I'd saved them, and I had a savings account, and I wanted to go to the bank, and ask them, to show me those 10,000
All
shillings.
right. Okay.
But then somebody said, that's not really possible, and I I was became kind of suspicious, and I thought, why isn't it possible? Because it's my money. So I that was probably when I very early on found out about fiat money, and whom to whom the money actually belongs that you've got in your current or savings account. But with those 10,000 shillings, my father recommended to buy a fund. It was called, I remember, the ECA bond, which was, I think it was investing in corporate bonds and also some emerging market bonds, and it had a kind of a coupon of 10%. So every year I got like 1,000 shillings out of those 10,000 that I invested in basically coupons, and actually my dad gave those 1,000 shillings to me, which was quite a lot of money for a 10-year-old kid. And I, of course, I bought like toys and whatever, but then I realized, wow, that's pretty interesting. And then a bit later on, because my dad, he was running a company, and I always thought, okay, well, I want to have an entrepreneurial life, and I got interested in investing, and I asked him, why are you reading the newspapers, and why are you studying, all those pages and columns in the newspaper with all those prices? So he explained me what it was all about. And then I bought my first stocks when I was like 13 or 14. And my reasoning was, or my strategy was, that I was buying the stock that was trading the furthest away from the 52 days moving average. So it didn't turn out too well, but my dad covered the losses. But that got me fascinated, and that got me started, and then there were quite a lot of IPOs going on in Austria, and I always participated, and then actually I went with my dad to some presentations, and now I saw the great Andre Costolani very early on, and as well as Jim Rogers, and yeah, those two gentlemen, they really fascinated me, and then during my commercial college, I started investing in the whole .com stocks, and I was yeah, pretty fascinated by the developments, and I basically bought into every IPO, because nobody cared about the business model and what those companies actually did, but as long as they had a .com in their names, they were up like 200, 300, 500% on the first trading day. And I remember when I graduated from commercial college, I wanted to get a Ferrari, because it's up like 3 million shillings, something like that. But then I thought, I'm not really the cars guy. I'm not so interested in cars, and it would feel kind of strange to have a Ferrari as a 19-year-old. And then, of course, the whole .com bubble did burst, and yeah, I continued riding the tram.
So you had to defer the Ferrari for a few more years. But I suppose the important thing is that you had started.
Yes. Well, yeah. I mean, I think I learned a lesson about cycles, about manias, and about this whole irrational exuberance that we saw in in markets. Of course, I didn't know that those cycles, those human emotions are just normal. I was in this kind, it's different mentality, and I thought, I'm the greatest investor ever. So I learned my lesson, and went to university afterwards and thought I would learn more about investing there, which I didn't really, but I kept on investing, and I think what's most important, I really tried to read everything I could on investing. One Up on Wall Street, Peter Lynch, all the Market Wizard books that were fantastic, and I continued trading the markets. I continued investing, and that's was basically the the point in time when I said, okay, I really want to start a professional career in this business.
In your writing and in other interviews, you often make references to football. I have to ask, who do you support?
Well, it's in Vienna. It's Rapid Wien is my favorite club. It's a very very. I think it's the club with the biggest tradition, and it's pretty well known outside of or also outside of Austria. Yep. But the recent years weren't too successful, so you have to be some sort of a masochist.
Contrarian.
Let's put it that way.
Ronnie, do you remember a player called Alex Manninger?
Yeah, he was playing at Arsenal, Austrian goalkeeper, right?
Exactly, yes. So at the time we had a goalkeeper called David Seaman, who'd been there for years and was a hero. But he was coming towards the end of his time at Arsenal, and we were hopeful that this youngster that we recruited from Austria would be the one to take over from him. But somehow it never worked out.
I thought he was a good goalkeeper, and
he was,
especially relative to David Seaman, who was I wasn't the biggest fan of Seaman. But Manninger, he played afterwards. He played also for Red Bull Salzburg, which is obviously now the big team in Austria.
Juventus.
But he also played for Florence, for Udinese, and at the very end for Juventus Turin.
That's right.
Always as a second or third goalkeeper. But I think he was in his best days. He was a really good keeper.
He definitely was. He even went to Liverpool briefly with Jurgen Klopp.
Yeah, but probably as a fifth goalkeeper.
Right. Yeah. In a kind of semi-coaching role. Yeah. The good old days. But in our lifetime, football has changed so much in so many ways, and all the signs are that this trend is only going to continue. So from changes to the rules seemingly every season, to VAR, to the way that it's broadcast, to how people consume it, sometimes watching several games in parallel, billionaire benefactors, and on and on and on. Are you optimistic, Ronnie, about the future of the beautiful game? Do you still enjoy it as much as ever?
I don't enjoy it as much as I did enjoy it back in the days. Everything is super commercialized. It feels very very American, where you try to squeeze out money from everything in this beautiful game, and we are seeing this. I don't want to apply too many thoughts from economics and translate them into football, but I think we're seeing quite a lot of similarities, and we are seeing this massive inflation when it comes to the World Cup. It used to be 16 countries. In German we say Endrunde, so it's really only for the best teams. Then it was 24 countries. Now it's 32 countries. So of course there is much more games. But do you really watch I don't know, Burkina Faso against Mexico? And nothing against those teams, but I think it lost relevance, and it's also the same with the European Football Championships. It used to be 8, then afterwards 16, and now it's 24, and I think they're considering raising that number again. So basically, every European country will participate, and I don't see any need for that. From the point of of a spectator, of course, it's big business. It's very similar with Champions League. I used to watch basically most of the games now. I'm starting with the quarterfinals. First of all, because I don't have too much time anymore. I've got three fantastic daughters. I've got a business to run, but it seems that there's always the same teams playing against each other. You don't have too many teams, with less financial resources that come up to the let's say quarterfinals. And one thing that really bugs me is that players became prostitutes. My wife and I we just went to Rome. I call it contrarian traveling because it was fantastic. No tourists at all. You went into all the museums and the big sites, and there were no lines. It was fantastic. And we went to a restaurant, and I think the owner was a big supporter of AS Roma. And we were talking about Francesco Totti, and I mean, he only played for AS Roma from, I think, 93 until 2017.
He'll go down as a club legend.
Yeah, he never played for any other team, and he got great offers from all over the globe, and he could make much more money, but his love and his life was AS Roma, and he didn't want to prostitute himself. So I don't see that anymore. Those legends that that really have the heart and soul for their clubs, which is it makes me a bit sad. On the other hand, I think life is a big pendulum that swings. So perhaps at some point those developments will change. Perhaps the whole COVID crisis is a reason why football might change. But I think here again, I think the really good team, the really financially wealthy teams will probably suffer significantly less than the small teams. And nowadays, for Rapid Wien, there is some really good young players. And one of them he's 17 years old. He's a tremendous player. And for the big teams, they can buy him for like 3 or 4 million. That's nothing. And then see what's going to happen to him. And if he plays 2 good seasons, they sell him for like 50 million to any other club. So we'll see. I've got in one of my presentations, I make the comparison with asset price inflation, and I show a picture of Cristiano Ronaldo. Yeah, you could buy him for I think 60 million 10 years ago, and now what do you get for 60 million?
Harry Maguire.
You'll get like average defenders. So asset price inflation is everywhere. Yeah, exactly. Yeah, Harry Maguire. Most people don't really know him. But yeah, I think it's I love watching sports, in particular football, but it is not as fascinating as back in the days. But probably that also has to do with my age.
Right, and just sticking with sports a second longer, is fitness training an important part of your routine?
Yes, I do run quite a lot. I was preparing for a marathon this year again, but then of course it was cancelled. So I tried to run like 170 until 220 kilometers per month. I go quite a lot of, during winter as a good Austrian, you have to go skiing. I still do quite a lot of snowboarding, especially off-piste. We play soccer every Sundays, which is also, very much of a social thing. It's just fun. doing sports with good friends and having a beer afterwards. And I think this is something that people really underestimated during the whole COVID lockdown, how much we are, social animals, and how much we need those moments together with friends and family where you're spending time together. So I do quite a lot of sports. First of all, because otherwise I would really get fat, because I just enjoy eating, and then because every time I do sports, I just feel better afterwards, and it's just something that I really need to feel well, and to work well, to sleep well, and to be in a good mood, yeah.
Mm-hmm. And Ronnie, moving on, you sometimes refer back to your days as an analyst at the bank there in Vienna. Could you tell us what a typical workday was like for you back then?
Well, I started working, besides my studies, at a bank where we're trading credit derivatives. But then I started as an analyst on the equity side, because that's just what I enjoyed much more than trading CDS and ABS and CLOs and all those derivatives. So I was always more of an equity guy. I was always an early riser, so I was never the guy that starts working or studying very late at night. I always, when I had something to do, I got up at 5 and just started studying or working. So I started always as one of the first ones in the office. I did quite a lot of reading always. I often did my reading after work in the cafe house in Vienna. We've got a very strong coffee culture, so it is just a place where you go to read and do some work, and I always did that after work for 1 or 2 hours. And I always, for some reason, enjoyed working on public holidays, because you didn't get any emails, any calls, nobody was in the office. And then my boss approached me and said, "You have to do the CFA now." And I said, "No, like one of the first lines in the CFA study notes is, there is only one riskless asset, US Treasuries." And I said, "No, I can't do that." So I did the CMT, the Chartered Market Technician, and the CFTE, which is the Certified Financial Technician. So that gave me an additional tool in my toolbox, learning about different techniques of technical analysis. And there are so many aspects, there's like candlesticks, then there's market structure, there's sentiment, there's Elliott wave, there pattern recognition, there's quantitative analysis. And I just thought that technical analysis really helps me in my decisions for entries, but also especially for exiting positions. And I very much enjoyed those studies. And I remember when I started my first in gold with trust report in 2007. It was pretty interesting to see that basically nobody understood why I was starting something that nobody has asked me for, because it was basically my initiative. I went to my boss and said, can I write this special report on gold? And he said, "Yeah, go ahead." But nobody said, "Why do you want to do that? I mean, don't you have other things to do?" And I said, "No, I just enjoy that."
Right. And then after your time at the bank, you started up Incrementum together with 7 partners in 2013. Did you enjoy that process of starting your own company?
Well, in hindsight, I often ask myself or my colleagues, how did we do that? I mean, I have to say I quitted my job in 2012 after one day after my first daughter was born. And so I was a young dad. We moved to a new apartment and tried to set up our company. And it was, setting up a company is always complicated, especially in bureaucratic legislations. But I think when it comes to a company in the financial services industries, it's much more complicated. And getting the license from the Liechtenstein Financial Market Authority was a very, very complex process. It took us many months, and we learned quite a lot from it. But it is not only that sounds very easy when you say, okay, we're setting up our own fund company, but there's so many different tasks involved. Your own compliance manager at the beginning. You got to take care of risk management. You got to take care of marketing, of course. You have to launch your own webpage. Of course, you can hire somebody and pay him, like, I don't know, 30,000 francs. But at the end, it was important for us to really communicate our convictions and our feelings, why we are setting up this company and why we are different from our competitors. So we did it on our own. Then, of course, you have to prepare all the material for your funds. So we designed the corporate identity. Then, of course, you have to take care of the fund management process, of the risk management process. We were always extremely research driven. So we published our own pieces about gold, about mining stocks, about inflation, about our thinking. About the Austrian School of Economics. Then we wrote a book about the Austrian school. So that was, of course, a major part. And then you have to take care of, administrational things, and booking business trips. And at the beginning, we simply didn't have the money to fly everywhere and just pick a hotel. So we were really our budgets were tight. And in hindsight, I'm really impressed with everything that we achieved. But I sometimes ask myself, how did we do that? I mean, it was such a big challenge that we accepted, and yeah, it makes me, honestly, it makes me very, very proud what we achieved, and it's definitely something where I also try to help, young kids that also want to set up their own companies. We learned many lessons, and I try to mentor some people, perhaps circumventing mistakes and just help them.
Yeah, give them the benefits of that experience. Ronnie, you've said elsewhere that when you were working at the bank and writing about gold, you felt like a vegetarian sitting in a butcher's shop. Could you describe a little bit for us what that was like?
Well, if you travel back to the year 2007, the Fed funds rate was 5% back then. Gold was trading at I think $600 US. The S&P was at 1,500, and what was the Federal Reserve balance sheet? I think it must have been like 800 billion, and now it's 7 trillion. So who was the president, US president in 2007? Probably George W. Bush. Yes. So it was, it was a quite different time, and back then, I studied in Vienna, and I never heard about the Austrian School of Economics, and only because I think I read in 2008 some comments on zero hedge where they referred to Ludwig von Mises, and it said, as the great Austrian economist Ludwig von Mises said, and I said, Mises, I've never heard of him, and so I, of course, I googled him, and I ordered like every book on Amazon that I could get, and I talked to my now partner Mark Walek, who was trading or managing a inflation fund back then for another bank, and I said, have you ever heard about this Mises guy? He said no. So we started learning more about the Austrian school, and it felt like, swallowing the red pill, and from one point to the other, everything made sense. And I think that, when you're sitting in a bank, and I really had a great time at the bank, fantastic colleagues, a great boss, and I really enjoyed my time there. But still, I think that most people have no clue how money is actually created. Most people don't have any idea what happened in August 1971 and what consequences our monetary system has for us as investors, as citizens, as family fathers, whatever.
That was only...
Yeah.
It was only supposed to be temporary, wasn't it?
Yeah, of course. But now we're celebrating the 50th birthday of the end of the... Yeah. So I think that felt kind of odd, writing big reports, where you discuss the virtues of the gold standard and the Cantillon effect and the negative consequences of inflationism and extreme credit growth. It felt kind of odd, and somebody said, how can you publish those reports? I mean, you're still working for a bank. And I said, I tend to write quite a lot, so probably most people don't have the time, or just don't enjoy reading 170 pages, so they don't see what I'm writing on page 89 about the gold standard, for example. But at some point I said, okay, I really want to communicate everything that I want to say. I want to set up my own company. I really want to get the word out about our investment thesis, how we see markets, how we see gold, not as a commodity, but of course as a currency. And then it was just normal for me to quit my job and set up my own company.
Mm-hmm. And speaking of writing, Ronnie, I think that's such a powerful way to process and make sense of things. Is that why you write, Ronnie, or is it just for the sheer enjoyment of it, or to keep a record to refer back to later?
Well, I actually, I always enjoyed writing, and I should write my diary really more, but I think I tweeted it out through when the whole COVID crisis really hit hard in March and in April, and those were like the biggest interferences of our social, of our political, of our financial lives in decades. So I felt like I really have to write down what's going on in markets, but also politically. I wanted to write down what people feel, what people say, how little criticism or questioning happened back then. So I wrote like for half an hour every day, and I think it's reading those thoughts a bit later on will definitely help me understanding other circumstances and situations. But in general, I think it's really important to write. It is something that I do, with personal aims or targets that I have, for example, for my next marathon, but also, for us running the business. We're really trying to write down the plans. It is something that I really do every day. I do a checklist of all the things that I have done that are still open that I want to do tomorrow. I try to prioritize, and I think if you write it down, it's just a very different status to if you just have it in your brain as a thought. And so therefore, I think writing a diary is definitely something that helps everybody. And I should, as a reminder for myself, I should write more, I think.
Mm-hmm. You mentioned COVID there. We're recording this in October of 2020, and we've all had to make real changes to the way that we live and work because of the pandemic. Ronnie, when all of this is behind us, do you expect to go fully back to normal life as it was pre-COVID, or do you expect to adopt some of these changes for good now?
Well, actually, I saw it now over the long weekend with my wife in Rome. I think our species really, we're really good in adopting things and getting used to difficult circumstances quickly. So in Rome, for example, and then they were heavily affected by the whole crisis. It was just normal to wear the masks also outside, and I felt that people, although they were definitely suffering, especially in economic terms, they did pretty well, and I think that the whole mood was pretty upbeat. I think when it comes to financial things or the future of monetary policy, I think that very radical ideas like MMT, modern monetary theory, helicopter money, universal basic income, they were basically the wet dreams of leftist economists a couple of years ago. Now they're becoming mainstream. So, the economic advisors to Joe Biden, they're heavily influenced by the MMT gang, especially Stephanie Kelton. So I think this is something that will be introduced very soon. Of course, it is not something that I really appreciate, but it is what it is, and I think that's those very radical inflationist interventionist policies, they will be introduced at some point, or to some degree they have already been introduced. And we should not forget, fiscal and stimulus and monetary stimulus so far was I think 26 trillion US dollars. It will be much more. We know that the debt piles that were already sky high, they grew even bigger. So this is the reason why I don't think that we will see rising rates in the next couple of years. So this also makes a pretty good case for holding at least some gold. And I think it brought us definitely closer to the end game. And the end game, if you study monetary history, has always been a monetary reform and a new currency being introduced. And so I think that's the path that we have taken. When it comes to business, I think it's in our industry, and I'm really thankful for that, because I've got many friends running restaurants or hotels. They're heavily affected, and for them it's basically game over, because now we can see that the second wave seems to be around, and winter tourism will be heavily affected. So in our industry, we're doing well. We can work from all over the globe. We can work from home. Of course, I want to meet our clients that I would rather call partners, because they're not like typical clients. They're partners, friends. It's a very close relationship. I want to meet them more often, and I don't think that doing a Skype or a Zoom meeting has got the same quality like meeting each other over lunch or dinner. And I think that's that's definitely something that worries me, and I really hope that we'll get back to traveling later on, probably 2021. On the other hand, when it comes to conferences, I always attend lots of conferences in the mining space, especially all over the globe. I think that I see it very Darwinistic, and I think that many conferences before, they were not well attended and poorly organized. So I think for most of them it will be game over. I think for the really good conferences, people will still travel to those conferences. It is not only about the meetings with companies. It's also, the rumors that you hear over the coffee break.
In the coffee room.
It is, just exchanging ideas and opinions about companies and the market with other people at the drinks reception. And I think this is something that I really miss, and that people in general miss. And I don't think that we will go to 100% online conferences. No, definitely not. But I think, we all have to make the best out of it. It is very challenging. It has been an extremely challenging year for me as a family father, but also, of course, running the business, managing money for our clients. It's been very challenging, but I actually like challenges, and I like competition, and therefore, it is really something where I feel that, as my partner Mark always says, pressure creates diamonds. So I felt this year was really, really, really kind of positive as we were challenged so hard, and I think we did really well.
Well, I think that's a really great optimistic note for us to end on, if that's okay.
Absolutely.
All right. So, Ronni, thank you once again for taking the time. It's been a real pleasure.
Thank you very much. It's been a great pleasure. And I really enjoy listening to your podcast. I think the episode with Raoul was fantastic. Congrats.
Thank you, Ronni. All the best.
Thank you. Same to you, Daniel. Take care.
So there you have it. A little bit of insight into how Ronni works. You can find him at incrementum.li or on Twitter at @Ron-Stöferle. We'll have links to both of these in the show notes. We'll be back soon with another episode, but until then, if you're looking either to hire or to be hired in the Zurich area, let us know by visiting either rigby.ch/apply for general applications or opportunities.rigby.ch for some of the requirements that we currently have open. Lastly, if you enjoyed this episode, please help us spread the word by taking a moment to rate and review the Way I Work podcast in the iTunes store. Thanks, and until the next time.